Welcome to Invest TV, India's first real estate channel. Triveda Capital, a SCBI-registered alternative investment fund, has successfully secured 80 crore rupees in its first fundraising round, according to Ravindra Pai, Managing Director of Century Real Estate Holdings and a partner in the newly launched fund. The initial investment was led by Ranjan Pai, Chairman of the Manipal Education and Medical Group. The fund, which aims to raise a total of 250 crore rupees, has already committed 15% of its size from the Century Real Estate Holdings family office. Triveda Capital's first fund seeks to achieve an asset under management target of $1 billion within the next 5 years. The focus of the fund is on plotted development projects, and it has earmarked its first investment for a 30-acre plotted development near the airport. The fund will allocate resources to both in-house under construction projects and third-party plotted development ventures. The AIF is raising 200 crore rupees, with an additional 50 crore rupees green shoe option under its Bangalore Opportunity Fund, which is categorized as a Category 2 AIF. This fund concentrates on plotted developments and residential assets in key metropolitan areas of South India. Triveda Capital plans to invest 15 crore rupees to 50 crore rupees per project, with project life cycles spanning 3 years, and is targeting an internal rate of return of 18% to 21%. The fund, which has a 5-year tenure, already has 2 plotted development deals in the pipeline in Bengaluru. Golden Growth Fund, a Category 2 alternative investment fund, is planning to raise 400 crore rupees for land acquisitions in South Delhi, with the aim of developing luxury floors. The fund has already completed its first round of fundraising and secured a land parcel in the prestigious Anand Niketan residential area. In Delhi, where low-rise buildings dominate the market, local builders typically redevelop properties and sell individual floors for up to 30 crore rupees each. South Delhi faces a significant shortage of luxury housing supply, said Ankur Jalan, CEO of GGF. We have partnered with Grovi India for development and plan to acquire 8 to 10 plots within a year. GGF's first project involves an investment of 50 crore rupees, including the cost of land, and is projected to generate 65 crore rupees in returns. Industry experts note that plot acquisitions in South Delhi have surged due to increasing demand for luxury residences with modern amenities. Builders are purchasing old properties, constructing 4 floors, and selling each floor separately. Jalan emphasized that while South Delhi's real estate market holds great potential, it suffers from a lack of transparency. Many investors are interested in this market, but are cautious due to the lack of reliable and fully compliant investment opportunities. With GGF, investors can invest transparently and achieve better returns, he said. The land acquired by GGF will be transformed into an ultra-luxury residential project featuring 4 apartments with a total area of approximately 17,000 square feet. The first project will be constructed by Grovi, a developer with over 100 completed real estate projects in Delhi. This initiative is part of GGF's broader strategy to acquire prime land parcels in South Delhi and develop them into high-end residential properties. The real estate market in South and Lutyens Delhi is valued at over 3 lakh rupees crore, but investors have historically been hesitant to explore opportunities due to a lack of trustworthy and fully compliant investment funds. Welcome to Pinvest TV, India's first real estate channel. The real estate sector is one of the most globally recognized sectors. It comprises of 4 subsectors: housing, retail, hospitality, and commercial. The growth of this sector is well complemented by the growth in the corporate environment and the demand for office space as well as urban and semi-urban accommodation. The construction industry ranks third among the 14 major sectors in terms of direct, indirect, and induced effects in all sectors of the economy. In India, the real estate sector is the second highest employment generator after the agriculture sector. It was also expected that this sector will incur more non-resident Indian investment, both in the short term and the long term. Bengaluru was expected to be the most favored property investment destination for NRIs, followed by Ahmedabad, Pune, Chennai, Goa, Delhi and Dehradun. By 2040, the real estate market will grow to 65,000 crore rupees from 12,000 crore rupees in 2019. Real estate sector in India is expected to reach $1 trillion in market size by 2030, up from $200 billion in 2021, and contribute 13% to the country's GDP by 2025. Retail, hospitality, and commercial real estate are also growing significantly, providing the much-needed infrastructure for India's growing needs. India's real estate sector is expected to expand to $5.8 trillion by 2047, contributing 15.5% to the GDP from an existing share of 7.3%. We value your input. Your feedback shapes our content. Thanks for watching Pinvest TV.